let us know how you feel QI has helped you, and in particular, how the retina alert through Symphony is also something part of your day.
Yeah, absolutely. Thanks for having me, by the way. I mean, QI has just been a value-add partner for us since, for many years now. This latest, invention from you guys is really above and beyond. So, really, how does it work at the end of the day? How do you use it in your day-to-day, workflow as a portfolio manager? Well, as Colin said, we are essentially taking macro factors, identifying a regime, and creating a fair value for a particular asset. That regime will move around over time, and the asset should generally track that regime. Occasionally, that will deviate and create these signals. So we'll get a 1 or 2 sigma valuation gap based on where the particular stock or bond or currency may be trading. And so that has huge consequences for me, because when you start looking under the hood of QI more broadly, you start to realize that most of their stocks have R-squareds over 70%. And so what that really means is macro is really dictating 70% of your book at any given time, and you need to be very aware of that and what you're betting on really under the hood of stock selection. And so just to give a particular example that happened last month, the S&P 500 was going through a 4 or 5% drawdown at the end of September. And it was, picking up on the relationship between Chinese CDS spreads and the S&P 500. And so if you could get confident that, the Evergrande situation wasn't going to get worse and Chinese spreads weren't going to blow out any further or might retreat and move tighter as they have for years now, then you should be very long in the market. And that's exactly what happened. We had a 7% move in the market, and CDS spreads collapsed back in until where we are today. And so just more of a recent example that triggered, a day or two ago, is IWD versus IWF. And to give you an idea of what that is, IWD is a value ETF, and IWF is a growth ETF. And so basically it's suggesting that the ratio between the two has deviated from the fair value. And so here you can see that the model is saying you should move more into a value portfolio because right now growth is doing very well, but the macro fair value for all of this should suggest that value outperforms growth from here. And so for me, when we go through our portfolio, we then start looking at, okay, how much factor exposure do I have to growth if it's about to underperform? Do I want to be trimming some of the winners in that portfolio? Do I want to move some of those positions into more value-related bets that have underperformed? And so that then allows me to dig a little bit more into the model, into Retina, and look up something like, Simon, if you mind just pulling up XOP. I'm an energy guy at heart, so. And just plot the valuation. So anyway, while he's looking this up, basically what's happening is XOP, when we're plotting just the valuation of XOP, is actually moving higher and the fair value is actually higher than the intrinsic price today. So moving more capital into XOP actually, is exactly in line with what's going on between IWD and IWF, suggesting move more money into your value bucket. And if then we pull up something like TAN, T-A-N, also an energy ETF, but more on the growth side because it's really solar ETFs that don't have much earnings power behind them yet. They're more just multiples of revenue. You can actually see here in the valuation that fair value is actually way down here, and it's trading 1.63 sigmas rich to fair value. So that then is pretty clear sign for me to start looking to move money out of the growthier areas of the market, even on a sector basis in energy, out of the more growthy areas and into the more value-oriented stocks. And this is, you can ping Retina to be able to pull any single stock that you want over time too. And the beautiful part about it for us is, we're a small team. We have 7 people. So this is really, and we, just launched early last year. And so the beautiful part here is that we're essentially creating a quant analyst in our pocket. And it only notifies us what we care on when there is an actionable signal. That's basically how we're using Retina on a day-to-day basis, and it's been extremely valuable to us. I mean, here's a good example of how extended Tesla is to fair value currently. I think it's trading around 3 sigmas rich. It's never been that rich in its history. So just an example.
Yeah, so what Simon did just now is he called up Tesla on demand. So you don't have to wait for Tesla to be a signal. You can call it up on demand, whether it's a valuation or momentum chart, as he has done just here. And you can click the metrics here to show exactly just how different it is from macro warranted fair value. I just want to underline the fact that there's no new logins here. There's no passwords to remember. It's all in your Symphony platform that you're already using. So these notifications are pushed to you saying, hey, pay attention to me when macro is relevant to me in terms of Tesla, for example. And so that makes it a very easy way to actually stay on top of your macro risks or your macro opportunities. Now, the other thing that I'd like to show is a new way in which you can track a number of different securities. So if you could just track, Simon, view tracked assets. So I created this list of assets that I'm now tracking for variations. So all of these, the dollar yen, PFE, XLU, Procter & Gamble, are now being tracked for me in my channel, so that whenever the model confidence changes dramatically, whenever the valuations or the momentum change, or perhaps most importantly, when the factor drivers change. In the case of Procter & Gamble, for example, you see how he knew I was going to go there? Procter & Gamble had a sensitivity to inflation that went negative on June the 2nd, or June the 3rd, I think it was. So in other words, the market was starting to discount the fact that inflation's actually going to be, at this juncture, further inflation is going to be a negative for PG. And that was in June the 3rd. But go back a couple of weeks or a week and a half ago, the CEO came on the earnings call to say, anticipated inflation next year is going to be higher than expected, commodity prices are rising, and that poses a risk to margins. But if you had this and tracked PG, you'd be able to have an alert to say, hey, inflation's a headwind for this company now, and not a tailwind. So it'll be a good macro heads up. So again, 4 things that it'll track for you. The R squared, which is the ability for macro to actually explain whether it's in macro regime, it was pushing or pulling the stock around with influence rather than idiosyncratic micro reasons. Secondly, the factor leadership. Thirdly, the valuation change, if that's large, and then if momentum suddenly turns south or an uptrend. And so hopefully that's given you a good sense of how Quant Insight and also particularly Retina on Symphony can help you keep on top of macro shifts.